Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish daily time frame scenario where we are looking for a finished three-wave corrective structure to the downside and now the beginning of a new impulsive move to the upside to new all-time highs. The most common target for wave C has been hit, which is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of wave B, giving us a target between 52.6 and 48.7k. Price moving to the downside and taking out this low would invalidate this scenario. The bearish scenario on the daily time frame is a larger sideways double combo structure. It's also a three-wave structure but then labeled as a WXY, after which we want to see price continue to trend towards the upside. Here we have a flat structure in a wave W, a complex structure in a wave X, and then we look for a zigzag to the downside in a wave Y or a triangle structure, but a zigzag generally is a bit more common than a triangle in a wave Y. However, what you can see here is that if we look for a zigzag, which is a 535 structure for wave Y, then currently with the high that we have locally at the moment, the common target for your wave C in a zigzag ABC is pretty much below 38.5k. And if you have seen any of the recent content where I spoke about the weekly time frame, then moving below this level here is pretty much confirming a bear market. So this is actually not what we like to see. So in other words, what we want to see locally is price to move towards the upside, because then we can take the trend-based fib extension here from the high to the low of A to the high of B, which then is going to move towards the upside. And if the high of B is going to move to the upside, the target area for your wave C of your wave Y is also going to move towards the upside. And if we can get close to, let's say, 65, 66k, then at least the one-to-one trend-based fib extension is around 45k. And we do have some additional support here, the blue box, at around 45k, 45.3 to 44.3k. So in other words, we want to see B move towards the upside. Now the common target for B is between the 05886 here, taken from the start to the end of wave A, 59.5 to 67.6k. And currently over here we are also on top of the 0.382 fib time, taken from the start to the end of wave A to compare A with B, which is a minimum target for a wave B, and preferably we end wave B on top or at least after the 0.382 fib time. If we then move towards the 1 hour time frame, then the bullish scenario here on the 1 hour time frame is an impulsive structure to the upside or an ABC. Here we then have a leading diagonal to the upside in a wave 1 or A, a very shallow retracement in a wave B or 2, not touching the 0.382 Fibonacci, taken from the low to the high of your wave 1 or A, which is very rare, but sometimes that is the way it is. And then we're looking for an impulse to the upside. Now in a wave C, we are now looking for a wave 1, 2, 3, 4, 5 wave structure, end of C, continuation to the downside. So the high of C would be that white B that we just spoke about on the daily time frame, and then you look for a wave C to the downside. However, we have the impulsive alternative where we look for a wave 1, 2, a 3, 4 and a wave 5. So what is important in this scenario is in that both a wave 3 or C, we look for price to move towards the upside, but then once we finish 3 or C, we need to pay attention to the corrective structure or impulsive structure to the downside. If we get a shallow 3-wave corrective structure for a wave 4, we're going to be looking for a 5, but if we get impulsive structures to the downside, we're going to be looking for new lows. The more bearish scenario on the 1 hour time frame is a almost finished 3-wave corrective structure in a WXY or an ABC. It doesn't really matter because your most common target area is exactly the same, and that is where we are at the moment. This is your common target area here for a potential ABC to the upside in a wave Y. But even if you count this as an impulsive structure and then a wave 1, 2, 3 sideways 4 now and a wave 5, this remains over here an important area of resistance on the chart, and therefore your wave C, you would expect to take out these highs once more and then move towards the downside. Now this at the moment then is of course your most bearish scenario, as you then want to see price reject in this area and move towards the downside, which is also the biggest difference with the bullish scenario, where we do want to see continuation towards the upside and definitely not a market structure change. I have the invalidation on the low here in the bullish scenario, but actually I can move it to the upside because I counted this as a lower degree 1-2. So officially you can then put your invalidation there at 56.7k. So in other words, for the bulls, we want to hold that level and move towards the upside. For the bears, we want to take out the highs, preferably here, and then move to the downside, change the structure, increasing probabilities for lower prices to come. Another reason why locally the probabilities are higher to still take out the local highs is because we have tested the 886 here many times. Taken from the high to the first low here, price went to the 886, rejected, 886, rejected. But by all means, the moment you hit an 886, the probabilities are low for a wave 1, 2, and a very big rejection to the downside in a wave 3, as the 886 is a rare target for 2, common for a wave B or X, increasing the probabilities that price action here to the downside is corrective, not impulsive, which in turn increases the probabilities for price to sooner or later take out this double top. If we then look at the CVD divergences, then very locally here, we do have some CVD divergences. We have some bullish CVD divergences here that appeared first, and with the recent candle close, literally at this particular minute, we have some bearish CVDs. We are, of course, in a trend towards the upside, so the bullish CVDs are therefore more important than the bearish ones, because for the bearish CVDs to have a higher probability, we really want to change some market structure and create waves towards the downside, which at the moment we don't yet have, right? So therefore a little bit higher probability here for the bulls, which actually, if I probably refresh my template, it should have already played out here on the 5-minute time frame. Yes, there we go. So higher low on price, lower low on the CVD on yellow, price taking out this high. Bullish CVDs have played out, and therefore the bearish CVDs are remaining, but in general the probabilities are higher to still take out these highs. And if we then finally look at the probabilities of the different scenarios, then on the daily time frame we are preferably looking for still some more upside, both of course in a very impulsive structure where we look for a bigger impulse up to continue the trend, but also even in the bearish scenario where we are looking for a wave B and then a wave C to the downside, you preferably still move towards the upside first, just to make sure the target of your wave C of wave Y, as shown in the analysis, is above 38.5k. And we should not forget that the alternative scenario for a wave Y is still a triangle, where we then have a wave A, we look for a wave B, C, D, E, and then continuation, but it's a bit too early to talk about this. Now on the 1 hour time frame, we want to observe a price here at resistance. This is at the moment quite an important level. The probabilities for the more bullish scenarios increase if we can pass this resistance and either move up on a volume, right? So quite a big move towards the upside, or at least take out the local highs, but then find support on this resistance, turning into support, a simple support resistance flip. Preferably see some grinding structures towards the upside together with some bullish CVD divergences, and that would be very nice to increase probabilities to move up towards that 65k level. What of course we don't want to see is the highs taken and then price moving below the recent low. We definitely want to hold this low over here. If we take this low, then the bullish scenarios become invalidated. On the 15-minute time frame, very locally, the probabilities are higher for price to take out the local highs. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.